the recent reports that I think the bond in South Africa was downgraded because of the challenges that they're facing in the economy, and ours was added to that index, the JP Morgan index, because of liquidity.
Yes.
I think the Nigerian market is becoming very liquid and attractive to investors out there. But I would like us to stick to, maybe just go back to the central bank's decision in terms of the cash reserve requirement of the banks. That figure has not really dropped, and that means banks would have more money to save the central bank. And a lot of the people we've brought on the program have complained, especially those from the Chamber of Commerce and Industry, that banks seems not to be lending to the people. They're not lending to fund businesses.
Well, let me differentiate something here. When we talk about market liquidity, we're not talking about the liquidity in the economy. We're talking about market liquidity is to say, look, you know, there are the market generally in every asset class is usually divided into two. You have the primary market where the primary issue is done, and then you have the secondary market. My members are involved more in the secondary market in terms of trading. So we are talking of trading liquidity. So in other words, the rapidity with which those issues are changing hands.
Isn't that a reflection of what is happening on the economy itself? Because if your members are active or are involved in the secondary market activities,
the
isn't
liquidity
that
we are talking
a reflection of the larger economy, where they are also playing a very major role?
It could be. I mean, of course, I mean, it has a very strong relationship. But the liquidity we're talking of is, look, you have bought, you have invested in a particular asset, and then you need your money. So how easy is it for you, you know, to sell that asset and then convert it to cash, which is the liquidity that we are talking of. So if you are not able to, and that's why we talk, when we say the at a point in time, we say, look, the equities market is not really very liquid, because people are not too willing, you know, to go and invest in that market, because they might find difficulties in selling when they possibly want to get out of the market. But what has happened, especially in the with relative to the bonds market, for instance, is that, look, the opening up of that market and then the listing, which we've just talked about by JP Morgan, is the fact that it's possible, you know, for you at any point in time, you invest today, in another 1 week or 2 weeks, you want to get out. And so a lot more people are bringing in funds. So that's, of course, foreign investors, that means more foreign, more dollars, more inflow of dollars into the country, because they bring in dollars. And so when they bring in dollars, the immediate impact has been that the foreign exchange market, that pressure has reduced, because there are now more dollars in terms of supply relative to demand. Secondly, taking a look at the liquidity which you talked about. That liquidity is, talking about the economy itself. The interest rate will determine where liquidity goes.
In other words, if the central bank
interest rate will determine.
If the central bank had decided to hike interest rate, that means these players would have to hike their rates as well to those who they lend money to.
They will find it more difficult to borrow as long as interest rates are high. But the tendency to borrow, you know, when interest rates are low, because it's higher.
But I think the complaint is that they're not still giving out funds, despite the fact that the central bank has left its interest rate unchanged at 12%.
Yes.
The banks seem not to be giving out as much money as
should banks give out more
to facilitate? It's a loan.
No, just wait. Should banks give out money just because liquidity is available?
If there's a purpose for it and you meet the criteria
very
for
good.
giving out.
Thank you. You just said it. That's exactly the point. If the criteria for a bank lending money has not been met, then because liquidity is available, you will not just.
Okay.
There is a difference between a gift and a loan. There's what we call, basically what we call the canons of lending in banking. There are principles, essential principles you cannot flout. If you flout any of them, then obviously you risk not collecting back your money.
So for those who have been queuing up and been agitating for the banks to lend, they should be listening to you.
Well, I'm sure they will be more tutored by the bankers because you walk into any bank and you say you want to borrow money, then obviously there are those who are available, but on a general note, there are some conditions before loans can be given out, and that's why I said there is a difference between a gift and a loan. In some instances, most of those who might want to approach banks for borrowing, based on my own personal experience, is that they think, oh, banks are washed with money, and so whatever they give, even if I go away, it will be part of my national cake, so I don't need to pay back. And so they come with the mindset that, oh, we want to borrow money, we have this project and all of those things. But when you take a look at, when you apply those, what we call the canons now, what we call the criteria, you discover that they don't meet those criteria. For instance, you want to borrow money. What is your own stake in that business? And that's what we call capital in banking. So talking about the canons of credit, which could be 5 or 6. Of course, we talk about the character of the borrower. If you have somebody who goes from one bank to another and he will default, he will not pay, and then he wants to go and borrow in another bank, that becomes an issue. Bankers must be able to establish the character of the borrower. Then what about the collateral? Of course, part of the guidelines, that from central bank itself is that you can't lend without
a backup, more like a backup.
Collateral, adequate security to cover in case you default. And then there must be something because every kobo in any bank belongs to one customer or the other who have deposited that money there. So when of course, in the last 4-5 years, we all saw what happened in the industry. So of course, the capacity, for you to actually even utilize the money you say you want to borrow. And of course, there are other things which we call terms and conditions that will surround. These are issues that have to be looked at critically. But let me just give an example. Somebody says, look, I want to go and supply a good in Abuja, for instance, and then he's approached the bank. He's done his projections and all, everything seemed right. Now, in the last, and that will tell you that most of the issues we're talking of in this country, which has to do with lending, does not have to do with bankers themselves. Rather, it has to do with the infrastructural environment that we are in. Abuja Road, for instance, in the last 1 week or two, it's become extremely difficult. People spend about 2-3 days to cross, from Lokoja to Abuja. So if somebody had made a projection on the basis of everything, you move from Lagos one day and you get to Abuja. So what happened? Goods bought, for instance, if they are perishable items. So there are a lot of things that we have to, but generally, it is the level of perceived risk that determines whether a bank should lend or not. If they consider the risk too high and it becomes and the customer cannot meet the risk acceptance criteria, then obviously that customer does not qualify.
Okay.
But what you are witnessing, which is not quite ideal for our economy, which is not as the fault of bankers, is the fact that banks will put their money where they believe they'll be able to get both the principal and the interest. And so most of the investments that you are seeing, we're talking about liquidity investment and treasury-based investment, people will look, the issue is not actually what I want to get as interest on my money, but the issue is safety of my money. And so where can I put my money that can be very safe? let me invest in government securities, and that's why you have a lot of activities in that
in the treasury
market.
bills. Okay.
But I can tell you, if the environment generally becomes ideal, ideal becomes what if the investment climate, becomes more hospitable, then you have banks, lending more money to the customer.